All right. Good morning, everybody. Good morning, all you magnificent melonheads of the world. Happy Thursday, everybody. Today's February 27th, 2025. And a big story this morning. It was the big story late last night. Nvidia reported their earnings after the closing bell yesterday, and they beat expectations as expected. That works somehow. Everybody was expecting Nvidia to beat. It's almost like we set our expectations low just so they could beat them. But look, they reported pretty good numbers. And I want to emphasize that the numbers were pretty good. The numbers were not great, at least not by recent Nvidia standards. They weren't great. Let's talk a little bit about the numbers. 39.3 billion in revenue. That is a beat versus 38 billion expected. Revenue was up by 4.2 billion quarter over quarter. Remember that 4.2 billion growth in top line revenue. That's important. We will come back to that number. But look, those are pretty amazing numbers here, guys. But the market just didn't really care. Nvidia stock was actually down 2.5%, 3% for a while last night. This morning, it's up about 2%. It's bouncing up and down a couple of percent here. If you looked at the options premium going into this Nvidia earnings report, the market was implying at like a 9.5% move in Nvidia stock off of this earnings report. So what does that mean? That means, scientifically speaking, there's a metric crap ton of options that are going to expire worthless. And the only people who really made money off of this report, the bulls didn't make money, the bears didn't make money. You know who made money? The market makers that are selling options premium to retail traders. They made a ton of freaking money off of everybody betting it was going to make a huge move one way or another, and then it just kind of meh. So really the only people who made money were Citadel and them. So congratulations to them. Go F yourselves. Moving on. Look, earnings per share was also a beat, 89 cents versus 84 cents expected. It was a pretty good number. Now, the guidance, 43 billion versus 42 billion. Okay, that's a raise on the guidance, but it's a very small raise, almost a token raise. So nobody got really excited about that. So far, this is just like your run-of-the-mill Nvidia earnings beat. Now, most people stop reading there. And like we talked about yesterday with the Supermicro 10K, I can't help myself. I have to keep reading. And there's a couple of other people out there who actually read the disclosures and the fine print and actually scrutinize the numbers instead of just saying, oh, Jim Cramer said it was an earnings beat, so I'm going to YOLO my whole 401k into zero DTE calls. No, if you actually look at it, well, start with gross margins, 71%. That's amazing. Gross margins of 71% are freaking fantastic. Nvidia has a ton of pricing power. The problem, though, that's been down sequentially every quarter since last April. We were 77% in our margins last April. Now we're down to 71. So Nvidia is starting to see some margin compression. All right, that shows maybe the competition is nipping at their heels. Also, the big thing, and I got to send a shout out to my friend Kakashi on X, who has been all over this one for a while. Accounts receivable. That is a huge issue over there. Accounts receivable at Nvidia were $23.1 billion. That's up from $17.7 billion in the last quarter. Now, you guys, look, accounting is not an exciting subject. I get excited about this stuff. I can't help it. I have weird hobbies. But a big sudden growth in accounts receivable is a buku red flag when it comes to accounting irregularities. And these accounting irregularities, as you may have noticed in the title, they're becoming a little too regular. It's almost like accounting regularities are now the norm. And well, maybe that's a what stage kind of moment when we sit back and like 2 days in a row, two of the biggest companies that everybody's talking about involve some kind of accounting irregularity. Maybe that's a sign of things to come. Hey, I just throw them out there. You guys do what you want with them. But those accounts receivable grew by $5.4 billion quarter over quarter. Now, you guys remember that number I told you to hang on to? That revenue growth of 4.2 billion? Revenue grew 4.2 billion, accounts receivable grew by 5.4. That means if you take away the growth in people who have not paid them yet, Nvidia's sales are actually heading lower. Big time growth in accounts receivable exceeding growth in revenue. That is another big accounting red flag. All right. It is taking Nvidia's customers longer to pay them. It's also a sign that they might be prematurely recognizing revenue. And speaking of premature revenue recognition, Nvidia said they had $11 billion worth of Blackwell sales in the fourth quarter. All right, that's a great number until you realize it's highly unlikely, if not downright effing impossible, that Nvidia sold $11 billion worth of stuff in the fourth quarter because they didn't even announce that this stuff was available until February. You guys remember Supermicro is now pleased to announce our Blackwell architecture is available? All right, if they weren't even available to the consumer until February, how did you ship 11 billion of them in the quarter that ended in December? And NVIDIA's own words, they don't recognize revenue until they transfer control of the product to the customer. In other words, they don't book the revenue until it ships. So they're saying they shipped $11 billion worth of Blackwell before the end of December, and yet somehow they weren't available anywhere until February. Just saying, that's another red flag. It's not a smoking gun, but man, these red flags are piling up. Got a great big pile of flags to match my coffee mug this morning. Also going on, cash flow from operations down $16.6 billion, down from $17.6 billion last quarter. You know what? You can fake revenue, you can stuff channel, you can round trip, you can do all that stuff, but you can't fake cash flow. If the money ain't in the bank, you can't make it appear there. And cash flow is heading down. Big time growth in accounts receivable, negative cash flow growth. There's another red flag to go with my coffee cup. You just can't fake cash flow. What else we got that? Revenue, take away the growth in accounts receivable. Revenue is falling. Days sales outstanding. I got to send a shout out to my friend Greg over at Coastal Journal, who did a really good write-up on this on Substack yesterday. I shared it in my Twitter profile. If you guys want to check that out, I highly recommend it. Days sales outstanding, NVIDIA reported 53 days sales outstanding. Now, days sales outstanding is basically how long it takes them to get paid from their customers. Now, how did they report $11 billion of Blackwell revenue if it takes them 53 days to get paid and they didn't even report that they were available until February, a month and a half after the quarter ended? Little details like that, suddenly this accounting doesn't really make sense. But the other thing is Greg over at Coastal Journal did the math. Days sales outstanding, if you actually calculate it, should be 64 and a half days, not 53 days. And Greg, I saw what he wrote yesterday, and I sent him a message, and Greg was really courteous. I said, hey, Greg, could you walk me through the math on how you're calculating how these days sales outstanding should be higher? And he walked me through the calculations of it. He took the time to do it, and he's right. NVIDIA is underreporting their days sales outstanding. If you take the other numbers they're reporting, you can backfit it. They're picking and choosing what they report. It's another accounting red flag. Days sales of inventory, which basically how long it takes their inventory from the moment they get it to the moment they can sell it. That's now at 86 days and rising. But Greg at Coastal Journal did the math for that. That should actually be 112 days. So take a step back. They're sitting on their inventory longer. When they do sell it, it's taken their customers even longer to pay them. And yet they're showing this big blowout in accounts receivable as cash flow goes negative. They're reporting huge numbers of sales for Blackwell chips. That defies logic because of all the problems they've had with the Blackwell that have been reported in the media. There are so many accounting red flags here. It's almost like nobody reads these things. Oh, that's right. Nobody does read these things. See also Supermicro. Well, I can tell you guys, is sooner or later, these red flags, you're going to have nowhere to put them. You won't be able to hide them, and it's going to catch up with them eventually. But for now, NVIDIA stock is up modestly on this earnings report. But again, everybody was projecting a much bigger move. So anybody who bought call options trying to gain these earnings, you just paid a bunch of money for premium that is now going up in smoke. Also, last thing on NVIDIA, with that piling up of accounts receivable and the declining cash flows, you better pray that TD Cohen note about Microsoft canceling data centers was off base. You really better hope, because if you've got $23.1 billion of revenue that you've already booked in accounts receivables and already reported that and already made your stupid speech on your conference call about it, and then those orders get canceled, you're going to have some splaining to do, Mr. Jensen. Also going on this morning, we got Salesforce reported earnings, and Salesforce is down a couple of percent on this news. Their guidance was light. Turns out nobody is buying Agentforce, their AI chatbot. That's their AI agents that are supposed to streamline this and that and help everybody make money. Look, companies are too busy struggling with higher interest rates and sales that are in decline, and they don't want to pay up for gimmicky chatbots. In other words, AI is yet to really make anybody any money. Go figure that's going on. But you know who is making money in AI? Snowflake. They reported earnings yesterday, and their stock is ripping. Now, Snowflake doesn't sell chatbots. They don't sell consumer AI products. They don't develop large language models. Snowflake helps the people who do develop the large language models organize their data for training in the cloud. And well, you got a data shortage going on for training these large language models. And so if your business is data, you get to name your price. Snowflake is ripping higher this morning. Shifting gears a little bit, we got the government has announced they're closing 120 IRS offices across the country. That's according to the Washington Post. And I don't know. Don't threaten me with a good time. That's all I got to say about that one. But, you know, my moderator, Mish, was quick to point out today when it comes to the government closing offices, we're hearing a lot about this, not just with the IRS. Pay attention to commercial real estate. We never really did get any price discovery in commercial real estate. Interest rates are still pretty high. That's still going on. You've still got a mountain of unrealized losses in CRE, even though work from home is kind of going away now and people are pretty much back to the office. Now you got a lot of government offices that are not going to be cash flowing. Pay attention to those CRE guys. Also, the jobs market, we're starting to see that show up today. We had initial jobless claims spiked by about 22,000. Pretty sure that's your federal layoffs starting to show up in the jobs numbers. Continuing claims was flat. Now, let me ask you, what if we were to hold a globalist cabal convention and nobody were to show up? Well, that would give you the G20 this year. The G20 is going on in South Africa, and nobody's going. Nobody from America, the Secretary of State, the Secretary of Treasury, a lot of European, Japanese, Chinese officials, people just aren't going to the G20 this year because globalism is receding. And again, we'll just throw that one right in there with the IRS offices closing. Never threaten me with a good time. You got Rolls-Royce reported blowout earnings here. Their stock is ripping. Demand for aircraft engines, small modular reactors, and submarines. And durable goods came out right before we went live. They were up 3.1%. That is almost entirely aircraft, as Boeing is clearly recovering from what was a disastrous 2024 for that company. Guys, we got a jam-packed show today. Let's shrink my big melon of a head and see what's going on in the market, shall we? Don't forget that like button and that subscribe button if you're new here for the YouTube algorithm, because we do this one every morning. Right now, the S&P is positive. It's up about 29 points, 0.5% higher. We were generally climbing throughout the morning. You can see this big red candle down. That was when we got the Q over Q GDP numbers and those durable goods orders. The market didn't really like those numbers. I think they were a little better than the market was hoping for, because remember, good news is bad news, and you know, what's the Fed going to do? So the market reacted downward a little bit to those GDP numbers. Now they're coming back up. The Dow, meanwhile, is higher by 39 points or 0.09%. Again, same thing, a little bit of a freak out on that news at 8:30, and now it's recovering. And the NASDAQ is leading the way higher, 167 points, 0.8% higher. Good morning for stocks. They're pretty much up across the board. Now, check out the dollar. Sudden strengthening of the dollar this morning, 106.98. That's up by about 47 basis points, all coming after 8:30 when those GDP and those durable goods numbers came out. So we had a strengthening of the dollar. I guess people are saying, hey, maybe a little bit more of a hawkish Fed coming out of that, coming out of those good data points. And so we're seeing the dollar strengthen a little bit. That's putting a little bit of downward pressure on stocks here. Looking over at the bond market, we have got yields are a little bit higher here. The 30-year Treasury, 4.548. That's up by 4 basis points. The 10-year is also up by 4 points at 4.290. The 2-year, 4.100, up by almost 3 points. And the 1 month is at 4.296, down a fraction of a point. Looking over at the commodities board, the sell-off in gold is continuing. Let's keep that relative, though, guys. We are still within about 70, 80 bucks of an all-time high here. But gold is down for the third, or is it the fourth day in a row now? $26 to the downside, down 0.88% at $2,890 for spot gold. Spot silver is joining it, $31.82 for spot silver. That's down by a couple of pennies here, 0.05% lower. Meanwhile, we've got copper is higher by 1.3%. Again, we've had a lot of tariff talk about copper, and that power outage in Chile continues to be a thing. So the world is pricing copper a little bit higher off of those two stories. Platinum is down by 1%. Palladium is down by about 0.9%. And WTI crude oil, 69.85 for April WTI futures. That is higher by about $1.20 this morning, or 1.8% higher. Bitcoin, meanwhile, caught a little bit of a bounce, but I tell you, yesterday was a bloodbath in Bitcoin. You'll notice 3 days in a row of some pretty extreme selling. We're catching a bid this morning. I mentioned yesterday, guys, on my stream that basically the 200-day moving average shown here in red is the only support between here and the high 60s. And, well, we came right down to that level last night. We got to a low of about $82,111 last night before we bounced. Right now we're at about $85,659. The level to watch, guys, $81,880 right now. That is your 200-day moving average. If we break down below that, then we are heading a lot lower in Bitcoin. It has been a rough couple of days for the hodlers. Now, we'll talk real quick about Nvidia earnings. I'm not going to take you guys through all the accounting measures that I just went through. This is what the mass market opinion is. It's always good to read what the financial press is saying, because most people stop reading at the headline and then don't actually dig into anything. So if you stop reading at the headline, you see Nvidia sees mixed outlook after 2 years of blowout results. Tighter margins and tariff concerns overshadow results, and the CEO gives an upbeat view of the latest chip, citing amazing demand. I would also add that Jensen Huang was asked a question about geography, and he gave this long-winded answer. Somebody tagged me in this on Twitter this morning. Thank you, whoever that was. I can't remember your name off the top of my head. He was asked about export controls and how that might affect various geographies. He gives this long-winded speech about the people who use your milk are going to deliver AI and everything. And then he never even mentions geography. Nvidia has a huge risk geographically right now because of what's going on with export controls, because the Department of Justice is looking into their violations of export controls. And those export controls are getting tighter thanks to this framework for AI diffusion that came out in January. Nvidia has a huge risk. If you look at the risks and disclosure sections in their quarterly reports, much like with Supermicros, they are getting longer and longer. Page after page is being added to these things, because the amount of risk in these markets is really piling up. But all they do is give their stupid speeches about how the world needs more compute. Okay, well, that's tech for you. That's Silicon Valley. Nvidia, the chip maker at the center of an AI spending boom, delivered good but not great quarterly results on Wednesday, drawing a muted response from investors accustomed to blowout results. That's a big thing there, guys. They're kind of spoiled. They're accustomed to these blowout results, and so this wasn't really good enough. Sales will be about $43 billion in fiscal first quarter. That's a pretty good guide. That's higher than the market was expecting at $42 billion. The company also warned that gross profit margins would be tighter than anticipated as it rushes to roll out a new chip design called Blackwell. The rollout of Blackwell has been an epic disaster. It was supposed to start in October. Here we are in late February, almost March, and they're only now getting underway, even though somehow they reported $11 billion in revenue. Nobody's asking questions about that except Kakashi that I'm aware of. And then there's the risk of U.S. tariffs weighing on results. After fluctuating between gains and losses, Nvidia shares rose about 1% in pre-market trading on Thursday. The mixed outlook comes at a shaky time for the AI industry. Nvidia shares have dipped this year on concerns that data center operators will slow spending. Chinese startup DeepSeek has also sparked fears that chatbots can be developed on the cheap, potentially reducing the need for Nvidia's powerful chips for AI. Nvidia stock right now, though, it's up 2.5%, trading at $134.65. Again, a very muted response, plus or minus a couple of bucks since this came out. We'll see what happens today. The market has had pretty much a, up pre-market and then sell off throughout the day kind of vibe to it for the last for the last week and a half, really. So if we follow that pattern today, Nvidia is going to end up giving back most of these gains here. And I want to send a shout out to my buddy Kakashi, who put this one out last night. This goes to show you the growth in accounts receivable at Nvidia. Your y-axis here, that's your quarters, and then this is the amount of accounts receivable. Side note, Kakashi, always use time for your x-axis so I don't have to hurt my neck tilting my head to view your chart. But you can kind of see here, guys, the growth in accounts receivable, the amount of revenue that they're booking that hasn't actually been paid yet. It is blowing out, and it has more than doubled in the last 2 quarters. All right, that's the one thing you really got to keep an eye on here. This growth in receivables, some people have noticed this one and called this one out, but most people just read the headlines. All right, Salesforce sees annual results below estimates as Agentforce adoption lags. Now, this is important, guys, because Salesforce isn't a big hardware company. They don't buy GPUs, and they're not part of the data center build out. Salesforce is one of the companies that's supposed to figure out a way to make money off of these data centers, and they can't. Business software provider Salesforce forecasts fiscal 2026 revenue below Wall Street expectations on Wednesday, weighed down by slower adoptions of its Agentforce platform, sending shares of the company down around 5% and extending trading. And Agentforce is their AI tools that they offer to businesses. The software as a service provider is banking heavily on AI agents to reinvigorate growth at a time when other cloud firms, including Microsoft and Amazon, have firmly established themselves as leaders in the sectors while making strides in machine learning. The downbeat forecast indicates that the spending environment remains pressured, with enterprises withholding new financial commitments owing to still high interest rates and economic uncertainty. Given how poor initial generative AI experiments were for many companies, they're not just writing blank checks until Salesforce shows them that Agentforce actually works. That's according to Rebecca Wetman, CEO of industry analyst firm Valor. That's a pretty powerful statement there. Given how poor initial generative AI experiments were for many companies, something that me and a number of people have called out, and yet everybody's just like, oh my God, the demand is insane. And I'm like, these things can't count the number of R's in strawberry. That's kind of a big deal. But beyond that, people just aren't writing blank checks to Salesforce for this stuff until they can prove it actually works. These companies are too busy struggling in this economy that is not as good as they say it is to waste money on chatbots that are really just gimmicks. They don't really do anything yet. Some of them do things. I use Grok a lot. Grok is actually pretty good. Before that, I used ChatGPT. I use Meta AI every now and then. But it's not like a crutch. It's not something I'm on for hours at a time. And like maybe every second or third day, I might use it for help with a title or ask it to go find me some data. But the other thing is you got to verify everything it gives you because these things are so prone to hallucination. Sometimes it just spits out outright wrong information. And so Salesforce is having a hard time making money off of that. That stock is down 3.8% this morning, $295.40, off by almost $12. Meanwhile, data or cloud data organizer, I guess you would call that. It's another AI company, but they work on the data side of things, not the LLMs. Snowflake stock leaps over 10% on earnings beat and bullish annual forecast. We've talked about this for a while. My buddy Carl at Internet of Bugs, there's a big data shortage. The world is running out of data to trade in large language models. They've started stealing it. The people they're stealing it from are suing them in court and winning. And so the people who manage the data are actually doing very well because of that shortage. Snowflake saw its shares jump over 10% in pre-market trading Thursday after the AI data cloud company reported fourth quarter earnings that exceeded expectations and issued better than expected revenue guidance for 2026. The software maker also announced an expanded partnership with Microsoft to integrate OpenAI models. The company reported adjusted earnings of 30 cents, well surpassing estimates of 17 cents. They almost doubled their estimates here. Revenue for the quarter came in at 986 million, beating estimates of 956 million. It's a 27% increase year over year. Product revenue reached 943 million, up 28% year over year, and the company's net revenue retention stood at 126%. Snowflake just reported a banger of an earnings report, guys, and this one is up 12.6%, up $21 at $187.20. All right, enough of the AI already. Can we be done with AI? Pretty please, with a big giant cherry on top. Washington Post reports that the IRS will close down 120 offices. Now, that's pretty much the story, guys. There's not a lot more detail than that, other than the fact that they're closing down, what are they calling them? The Taxpayer Assistance Centers, as the White House's efficiency zeal carves deeper into the tax agency. And I just got to say, what a difference a couple of years make, because a few years ago, we were talking about 86,000 new IRS agents, and now we're talking about shutting down 120 offices. I like where we're trending. Let me just put it that way. I like where this is going. Let's keep it coming now, huh? Now, on top of this, guys, again, watch out for your commercial real estate. A big contraction in government office leases is going to add to the pile of commercial real estate that is no longer cash flowing. And commercial real estate, there's still a huge pile of unrealized losses sitting on the balance sheets of America's small and regional banks from commercial real estate. We don't hear a lot about that anymore, but it is very much still a thing. And now the government is, well, making it worse. Meanwhile, there are no shows and aid cuts mar the G20 meet on global poverty. Again, the globalist convention not going so well. The G20, the global poverty thing, they've been doing these meetings for a couple of years. I don't really see the global poverty going away anytime soon. I actually see it getting a lot worse while the people who go to the G20 meetings are getting a lot richer, beginning to think those two things might be related. However, South Africa sought to salvage international talks on tackling global poverty on Wednesday as finance chiefs from several leading economies skipped a gathering of Group of 20 nations in Cape Town held against a backdrop of foreign aid cuts. The two-day meeting comes after the Trump administration announced plans to gut its U.S. aid arm, and Britain slashed its aid budget by 40% to divert funds towards defense spending. U.S. Treasury Secretary Scott Bessent did not attend. Neither did finance ministers from China, Japan, India, Canada, and the European Union's top economic model. Others cut short their presence. Nobody's going to the G20. Again, don't threaten me with a good time. Meanwhile, Rolls-Royce, banger of a quarter for Rolls-Royce. That's making comparisons to Nvidia here. This is just sell-side talking points here. But Rolls-Royce, the engine maker that's been one of the hottest stocks in Europe over the last 2 years, extended its winning ways on Thursday after beating analysts' expectations and setting medium-term guidance that points to continued growth. The company's been growing on demand for aircraft engines, submarines, and nuclear reactors. Now, I was a little skeptical of that nuclear reactors things, but I had to go check, and it turns out, yes, there actually are some Rolls-Royce small modular reactors under construction in Europe, in Poland and the Czech Republic. So unlike a lot of American hype companies that are making big talking points and raising all kinds of capital and selling stock to idiots, talking about small modular reactors that they're going to build that aren't even legal to build in the United States, in Europe, they're actually building them. And Rolls-Royce is benefiting from that, along with submarines. Look, that's the increase in defense spending, and along with civil aerospace, the recovery in aviation. We'll see that in just a minute as well. While defense and power systems also enjoyed double-digit growth, Rolls-Royce having a heck of a morning here, up 17.5%. This is priced in British pounds, 741 pounds. That's up by 110. All right, now, speaking of defense spending and some of the things that we've seen, we got durable goods, also the aircraft issue. New orders for manufactured durable goods in the United States rose by 3.1% month over month to $282.3 billion in January. All right, so here's the chart showing durable goods here, up by 3.1%. That's pretty good. The market was expecting 2% growth, so that was a big beat. Now, here's the thing. When you strip out transportation equipment, which means autos and aircraft, when you strip those out, durable goods ex transport in the U.S. were actually unchanged, up 0.0%, or maybe a pessimist would say down 0.0%. They went nowhere. So we go from 3.1% to 0.0% when we strip out transportation equipment. Guys, this is all aircraft. We've got really lousy year-ago comps because of everything that happened with Boeing a year ago. And so things are looking just a lot better now that the aircraft industry is recovering. I don't think this is necessarily a sign of economic prosperity. This is just a return to the mean from a really bad year. That being said, maybe 2025 is going to be a great year for Boeing. 2024 sure as heck was not. Also going on this morning, we've got initial jobless claims in the United States, and we got a nice little spike here. Initial jobless claims in the U.S. soared by 22,000 from the previous week to 242,000 for the third week of February. That is the most in over 2 months and well above market expectations that they would remain stable at 221,000. Look, guys, there's your chart there. These are weekly initial jobless claims, big jump of 20,000. I'm going to go out on a limb here and say this is probably federal workers that lost their jobs over the last couple of weeks are finally showing up in the initial jobless claims. If that is the case, and if this is going to continue, see also that IRS story, then we're probably going to see these initial claims continue to rise here for a while. And look, the numbers that they're talking about, the amount of federal jobs that they're talking about eliminating here, that's going to show up in unemployment eventually. It might take a couple of months to show up. But I've seen estimates anywhere from 200,000 to 1 million federal workers that are going to be cut. 160,000 is 0.1% unemployment. So, do the math here, guys. We're looking at anywhere from a 0.2 to a 0.7, maybe even a 0.8 increase in unemployment just from cuts to federal jobs. That doesn't even mention things like contractors who do government work. They're not necessarily government employees. They're private sector employees, but they do predominantly government work. We're going to see a lot of those jobs going away as well. That is unless Congress has anything to say about it, because we were just talking about yesterday how Congress is increasing spending despite all of this. So, I guess we'll just have to wait and see what the data says. And also, continuing jobless claims, basically unchanged here. They dropped a little bit to 1.86 million from 1.87 million. That's basically noise in the chart. So we didn't really get any change in the continuing claims there. And I just want to say thank you very much to M&J. Thank you, M&J, for everything you do for the channel. Most recently, for the 20 Nobody Special Finance memberships that you just gifted. Thank you so much, M&J, for doing that. You do a lot for us here. Thank you for keeping things neat and tidy in the chat. And guys, if you receive one of those Melonhead memberships, be sure and let M&J know you are grateful. Thank you so much. Charles G., what's going on, sir? He says, you're almost there, Trump. Almost. Get rid of income taxes. I'm tired of losing $2,000 to income taxes every month. Look, I am a big fan of replacing the income tax with a federal sales tax. There's no perfect tax code out there besides none. Just throw it out there. It's just I just throw them out. You guys do what you want with it. But look, if we must have taxes, I like the idea of a federal sales tax versus an income tax. Let's tax consumption. Let's tax the takers and not the makers. Let's not disincentivize productive activity. Let's disincentivize destructive activity, consumption, all right? And look, if you're rich, you cannot hide from a sales tax unless you go overseas and buy your stuff and then ship it here. But hey, maybe we throw a little tariff on top of it there while we're at it. I'm not a big fan of tariffs either. The point is, income tax, somehow we went, what was it, like the first 100 years of the country, 1776 to 1913, somehow we all survived without an income tax. And life throughout that time continuously got better for everybody. Maybe if we take out the Civil War, we won't count that, but that had nothing to do with the tax code. The point is, we can survive without income taxes. We're not all going to be like, oh my God, I don't know what I'm going to do. The government's no longer automatically taking a third of my paycheck. What am I going to do with all this money? I will surely die. Do whatever the hell you want with it. It's your money. Better yet, instead of getting rid of the income tax, let's do a social experiment. Let's take away tax withholdings. Let's make every man, woman, and child in America that works. Let's make them all write a check to the government every time they get paid. Instead of them never having their money, because it is their money, let's give it to them first. Let them touch it in their hands, see it in their bank account, and then send it to the government. And let's see if that changes the average person's perception about how much of their money the government is wasting. I guarantee you the income tax would disappear within a year if they ever did that. Thank you so much, Chuck G. Appreciate the super chat and the support of the channel, sir. And T.A. Chapman, thank you, sir, for the yellow one, a big one. Elon, pink slip emails. My job is good, yet the stress is real. Yeah, oh my God, show me on the doll where the email asking you what you did this week hurt you. Anybody who works in the private sector or ever worked in the private sector, you get emails asking you what you did this week all the time. And federal government officials are like, oh my God, he's literally Hitler. He asked me what I did this week. Yes, that's what the Gestapo did. They would kick in your door, point guns in your face, and ask you what you did this week. Yeah, that's what the SS did, right? Wasn't it? Maybe we shouldn't lower the bar quite so much that much. But just to do it and just do it, fire, and we can move on with our lives and figure it out. Otherwise, it's just torture. Happy Thursday, Jack. Love you too, T.A. Chapman. Thank you very much, sir. Again, guys, like defending your position and stating what you did for your paycheck and in a given week. I mean, it's annoying. Nobody likes it, but everybody else has to do it on the reg. A lot of people have to do it every day. It sucks. Again, you're not going to get any sympathy from me, all right? It's my money that's being spent in your paycheck. Tell us what you're doing to earn it. And if you can't, bye-bye. And T.A. Chapman, thank you very much. Hey, look, T.A. is back. He gifted 10 Nobody Special Finance memberships. Thank you so much, T.A., for that. I appreciate that very much. Guys, let M&J and Mr. Chapman know you are grateful if you got one of those memberships. Welcome to the Melonheads, and thank you, everybody, for having your coffee with us this morning. I appreciate that very much. Don't forget that like button and that subscribe button on the way out. Really helps with the YouTube algorithm. Thank you to my Patreon and magnanimous Melonheads on YouTube. You guys are awesome. Thank you for supporting the channel. Links down below, should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. Everybody, till next time, live small and dream big.